Hello guys, Always FX here. We are now about to analyze Euro USD guys. Euro USD, it seems to be giving us a very good setup. So first thing first, we're gonna start by creating just our channel. I'm seeing something that looks like this guys. I'm seeing this big flag. I'm looking at this and then this is what I'm seeing, something like this. This looks beautiful, guys. This looks very beautiful. So this to me looks more like an impulsive, and then this being a correction phase, and then the market being in the correction phase. So we're still expecting to see something. Maybe the market comes, give us first touch, second touch, and the third touch, and then maybe it can come all the way down to this point right here before it shoots up. So you see, this is how it looks: impulsive correction, impulsive. So in few days to come, this we're gonna have something, some sort of like a structure which looks like this, of which like simple and straightforward, and then it's gonna be a long swing trades that are about to come. Yeah, well, so at the moment right now, we're gonna go to a lower time frame and try to figure out this move towards the upside to this third touch of this trend line, so that we can make use of this movement to the upside. Okay, so we're not going to concentrate too much on other time frames that much. Okay, on this weekly time frame, we can also mark this point right here. We can also mark this point right here. We can also mark this point right here. As we can see, the market came down to this point and then it got rejected. It pushed the market all the way to that upside, and then it came all the way down. And then currently now the market, it's kind of in a correction phase. The market, it's kind of in a correction phase, about to give, which is like impulsive correction. It can give us this impulsive to the downside. So but at the moment, as we can see here, this market, it is kind of on top of this zone. See where the market once got rejected and it got pushed to this up to this point right here. There is highly possibility again that the market can be rejected from the very same point. See, the market got rejected from here, so there is a highly possibility that the market can be rejected from that point as well there. Yeah. So this is what we want to make use of. Plus it's on the third touch of this trend line, like first touch, second touch, third touch. Plus it's kind of like in an impulsive phase correction kind of thing. But the more we go to the lower time frame, we would get to see that this is just a monthly time frame. So we wanted to draw or figure out the actual direction. Where is the market heading to? I see. So if you go to a weekly time frame to have more information, we'll get to see, you could see, yes, we did have this multiple rejection. The market rejected here. As you can see, the more we go to a lower time frame, some of the rejection, they also reveal themselves. See, as you can see, the market rejected here as well. So we had this strong rejection, strong rejection, strong rejection, and then the market broke above, and then it already rejected at this point right here. So we might be pushing the market all the way up to that side. So we might even reject that point and push the market all the way to that side. So this is what we have on a weekly time frame, getting to see more rejection and then see how sensitive is this point right there. Okay, so now the more we go down to a lower time frame, I don't really like keeping this kind lot of lines in my chart. I like to keep it simple and clean. So what I'm going to do right now, I'm going just to concentrate on this last part of the group of the graph. Like as you can see here, let's do it this way. As you can see here, we're going to concentrate on this lowest point right here. Remember, from a weekly time frame, there was that line. Okay, let's do this. Let's retro just that one line so that we can use it as the reference point. So remember, we had this trend line right here. So let's just keep this one, which we have like the first touch, second touch. So now we might be going for this third touch right here before the market can even go down. Okay, so we're just going to keep that trend line so that we can use it as the reference point. So what we have right now is this. So what we have now right now is this structure that looks like this. So if this is the reference point that we were actually looking for, so if this is the reference point that we're actually looking for, so you can already see what kind of a structure are we currently in. I want, because if you can make use of this, if you can make use of this low right here, you can say this low right here, and then you can have this as your high. So meaning like you can take this move as your impulsive phase, and then this being your correction phase. So we're gonna have use this as your impulsive phase. So which means the market was in a correction from this point right here, and then it broke above. This was the correction, and then the market broke above this trend line. So now it's currently pushing all the way toward the upside, but we're not gonna aim for that trend line at the moment. At the moment, we're still gonna have to just play around with this, because there's a lot of things that can still happen. Like if this is an impulsive correction, maybe the market is still gonna come retest this thing. So you don't want you to hold a trade for few days or for a week, for 2 weeks, while in being a profit, and then still don't close your position waiting for the market to correct. Rather close your profit at this point, and then wait for the market to recorrect and enter again to push with the market going to the upside. So what we're going to do right now is just, you need to understand that the market was in an impulsive phase right here, was in an impulsive phase, and then this was going to be the correction phase, and then the market is currently going to push all the way to give us an impulsive phase, maybe even up to this point right here, we don't know. But at the moment, the structure, the way it looks, let's just assume to say the market is going to push all the way to that point right there. But what you need to know is that the market can't just push in one direction. It has certain movement, impulsive correction. So if this is an impulsive, and then this is a correction, this is going to be an impulsive phase. But now the impulsive phase, it can't just shoot be one line or candles, one candle that we're not making impulsive correction all the way to the upside. No, so it's also going to move in a certain manner. Impulsive correction, impulsive correction is going to be moving in a certain manner, of which I do think that the market might be moving in this kind of manner. Okay, so what we're going to do right now, we are going to change the time frame. So what we're going to do now, we're just going to say this was an impulsive, and this was the correction phase. So if the correction phase was up to this point right here, therefore, which means now the market is currently in an impulsive phase, which needs to come to this point right here. So in this point right here, which means if we can see a structure which is moving impulsive correction, impulsive correction, therefore we'd be able to enter this trade. Okay, so let's go to 4 hour time frame. Okay, so the last time I analyzed this trade, I think we were live on TikTok, and then we had a trend line. The market was still at this point right here, and I said it to most people, guys, we can't take a buy, we can't take a buy setup here, because some people, they say it's a first touch, second touch, third touch, and then the market must be going up. We do not just take trades based on what based on on the touches, first touch, second touch, third touches. We also have to bring the structure in play. How does the structure forming some sort of like a confluence on the third touch, or it's just the third touch, of which like it can't just be the third touch. Okay, so we need to check that as well, because if the market gives us impulsive phase, correction phase, impulsive phase, correction phase, but this correction phase has to be in a way that we can already see that it's already being rejected. But the way this one was looking was like impulsive correction, impulsive. So obvious, when something looks like this, it's in a downtrend formation. So what's going to happen? Obviously, the market is going to do what? It's going to retest the previous low. So when the market retests the previous low, obviously it's gonna go towards the downside. But does that mean that because the market went down and broke below this trend line, does it mean that the market is gonna go all the way there? No, it doesn't mean that the market is gonna go down. But if you trade like, no, okay, the market broke this trend line, the market is gonna go all the way down. You're gonna make a loss because you're gonna be in a positive, just like now. You are in positive if you took a sell here, but you're gonna be in a negative in no in few hours because you don't understand something. So, but if you started on a higher time frame, you would know that we are aiming to go all the way up. If you started on a high time frame, you would definitely know that this is an impulsive phase which needs to go all the way maybe to this point right here. Okay, so what we're going to do right now, we're just going to try to figure out how can we enter this trade. So within this trade, we still need also to do impulsive correction. Impulsive, so the market is currently in a correction phase, so we're still expecting the market to push all the way up. So your first take profit can be on this, let's just say on this previous high, but the market is still gonna push maybe all the way to that point right there, maybe all the way to that point right there. So you can already see ukuthi this is going to be a beautiful swing trade. Even if you can take this last impulsive phase and then you're gonna post it here, and then you know for sure when you enter there, when the market allows you to enter there, you are going to enter, and then your take profit is going to be there. So this is such beautiful swing trade. This is such a beautiful swing trade. Okay, so but now let's just figure out how are we going to enter this trade. So impulsive correction. So if you can have a look on this correction phase, you would see, let's see, if you can have a look at this, you would see the market has been rejecting the very same zone right here. This is such a sensitive zone. See, even here the market rejected this point, pushed the market all the way to that point right there. We saw even that on a weekly time frame. There's no need for us to go back to a weekly time frame, but if you did see that on a weekly time frame, the time we draw the first line, you would see this was the zone or the line that we expected to see. So here we have a structure that is more like a double top. So this double top was not a double top that when the market breaks below this trend line, it's gonna go all the way down. No, this was the end. This was just an indication of the end of the. Okay, even if you can delete this, let me just do this for you guys to see. So this was an impulsive phase, correction phase would have been here. Impulsive correction, impulsive. So now the market just gave us a what? The end of the what? Of the correction. So what we're expecting to see is to see the market break above and go all the way. So this is going to be a beautiful swing trade towards the upside. You see, so we're just waiting for the market to break above this trend line, and then this is going to be a beautiful setup. As you can see here, even if you can go to 2 hour, you would see what the market is doing, what the market is giving us, what we want to see. The structure, the end, the indication that this is the end of the structure. How do you see that? You see it by head and shoulder, inverted head and shoulder, double top, double bottom, as we can see here. Ukuthi, now the market has just given us the what? The double bottom. So this is going to be the zone of a neckline. So if the market is really, really, really going to push to the upside, if it's gonna come close with one candle above this high, therefore you know which okay, the market is gonna do what? Even if it can push slightly up, can retest the neckline. Therefore, that's when you're gonna aim for that trade to even enter, making this your first take profit or even higher. Because we have seen from the higher time frame that the market might possibly be going to that trend line that we drew all the way. So remember that trend line there that we said we're gonna use as a reference. Maybe the trade can be going there, but for you to be safe, because you can't predict the market, you can make this first TP, and then this being your second TP. So guys, this is how I see Euro USD is going to play out, and then it looks like a very beautiful trade to me. So I'm going to enter this trade, guys. I am going to enter this trade, definitely going to enter this trade. Okay, definitely going to enter this trade. I'm just waiting for it. I'm going to put a notification here. When the market closes above this, I am going to enter this trade. I am going to enter this trade. So I'm just waiting for that push. So I want the market to go all the way to there, to that point. So this is how I see Euro USD, guys. Arus FX. I am out.